Good morning, traders. So just Tony here. Welcome back to another episode of Macros with Tony. We're going to be going into the gold and silver short squeeze opportunity in the market right now. A couple of weeks ago, I did put out a webinar on what's happening with managed money in the gold market and how it's setting up a big opportunity over the next year across precious metals. Now, a similar scenario is also taking place in the silver market as well. So we're going to dive into the charts. We're also going to dive into the fundamentals behind the scenes. Now, just a recap from our previous webinar. So the net bets on gold by Managed Money on the COMEX Futures Exchange went net short for the sixth time in history. So there's only been 6 times previously where this has happened, and it has resulted in a bullish market in gold. So this is a very bearish sentiment from Managed Money. It sets up what we call a short squeeze opportunity, where the price of gold starts to move higher and it starts to liquidate a lot of those short sellers from the Managed Money side. Now, the value of the speculative bets against gold was the second highest on record. So you can see that Managed Money has become very bearish due to rising interest rates, which is putting obviously downside pressure on the metals market. But we did highlight previously how bullion dealers and swap dealers are actually draining the vault at the moment, and big players are standing for delivery. So if big players are standing for delivery, they know something is happening behind the scenes, and this could be a good area to start accumulating gold and now silver as well. Now, if we take a look at gold and its returns after a surge in speculative money getting net short on the market, you can see that each time has resulted in a positive return. The average return in the gold price has been around 20% increase in the spot price of gold. So if that similar scenario plays out and we get an average return in the gold market, that would take the gold price above record highs. So we've got 52 weeks, over the next year. It's not a short-term play. This is something that we can start to take up in stages, either through trading or buying gold or buying some mining stocks over the next year. So not necessarily just we're going to place a trade on gold and let it run for a year. We will obviously look to trade it up in stages and buy into any pullbacks in the market. Now, how has gold performed since our last webinar? So gold has actually come down from roughly 1800 to that 1718 support level. However, there has now been a higher low. So our Elliott Wave analysis is still valid at the moment. So we have our bullish invalidation level around the 1679 level. We can count a 5-wave structure to the upside. So you can see a 1, 2, 3, 4, 5, possibly the start of a new bullish trend. We have an A, B, C decline. So we can only count 3 waves down, which is a corrective decline. We can see a higher low and a breakout of a negative trend line as well. So we are looking to trade this higher. If this occasion obviously moves lower, we'll just have to wait for the next setup as well. So all we can do is trade what we see. We can see a 5-wave bullish impulsive move to the upside, and we can see a 3-wave corrected decline. So we'll look to take this up in stages. We've already got a leverage play on in the trading floor. 1825 is our short-term target, and then again we'll look for pullbacks in the market to buy into. Now, the next chart, what we can see here is the GDX. Okay, so this is an ETF in the US. We also have one here in Australia as well. Now, what we can see is we're getting a bullish divergence on the MACD. Okay, we can see every time the GDX has reached these levels, okay, that has resulted in a bullish reversal. So we are seeing price come down to these major lows at the moment, and this appears to be a bullish signal for the GDX as well. Okay, so you can see it lines up very nicely for the ETF in the US. So another bullish signal there. We've got our Elliott Wave count as well. So this is just building a case for a bullish scenario in the gold market. So we've covered gold. Now today we're going to dive a bit more into the silver market. So we're going to be looking at the commitment of traders reports. And here what we can see is swap dealers are now net long in the market. So swap dealers, bullion dealers, they've been reducing their short positions in the silver market. What we can see from Managed Money is net short by roughly 18,000 contracts. So this was the week of August the 30th. So we can see they're now building into the short side of the trade. Now, if we go to the update one, so this is last week's commitment of traders report, we can see they've now increased their short positions even further. Okay, and swap dealers have reduced their short positions even further as well. So really, we're getting this picture that managed money is getting overly bearish on the silver market. Now, if we take a look at silver from an Elliott Wave perspective, we can see a bullish 5-wave sequence to the upside. We highlighted this in our trading floor, 1, 2, 3, 4, 5. A big corrective decline in here as well. So it's been quite tricky to kind of count this, but we are now assuming that this decline, this 5-wave decline in here, is possibly completed. And what we now need to wait for is a breakout of this negative trend line, a retest, and then we can start to look to buy and go long in the silver market as well. So a lot happening. We have managed money, which is net short, and they're building even more short positions into the silver market. We have a bullish Elliott Wave count on the spot price of silver. So either we can look to trade this in our trading accounts, or we can look to play this through miners. Now, if you're in the trading floor, you would have seen an article about Silver Mines Limited. I've begun accumulating this stock around sort of 18 cents. Okay, so we've got a nice bull flag breakout there. I can also count a 1, 2, 3, 4, 5-wave structure to the upside, an A, B, C for wave A, an A, B, C for wave B, and a 1, 2, 3, 4, 5 down for wave C. So that's a 1 and a 2. So if this is correct, we should be heading much higher on this stock price as well. So I encourage you to go to the article under the News Now section of the website. I did provide the fundamentals and technicals behind this stock as well. So, we're building a case here. I guess my invalidation level is around that 12 cents area at the 38% fib retracement. So if we do get a move down below that, I may look to take some money off the table with this stock. So I've started to accumulate around this area. I think that looks attractive, especially considering the Elliott Wave count on silver. So that's the gold and silver market. Now, if we take a look at what's driving the price of metals higher over the past week, we can see a possible top forming on the dollar index. So, picking tops and bottoms in the market is a risky game. All we can do is trade what we see. So we can see a pennant structure on the RSI down the bottom here. We're getting compression inside this pennant. So either we're going to get a breakout to the upside, or we're going to get a breakout to the downside, which may confirm a top for the dollar index. So depending on where you want to draw your rising trend line, this is a viable option at the moment around that kind of 111 area. We have got a rising trend line support coming up, so there's not been a breakdown just yet, but there are some early signs of a possible top in the market. I understand it's hard to see why the dollar index is going to reverse. Interest rates rising, geopolitical tensions globally, but technicals generally indicate tops in the market before the fundamentals align as well. So we'll keep tracking this. If we go down to the 1-hour charts on the dollar index, we can see a head and shoulders formation, a rising wedge breakdown. We've only got a 3-wave decline at the moment. So for us to kind of build a case for the short side, we really need to see a 1, 2, 3, 4, 5-wave down, which would be the first wave 1 of a reversal in the market. So still early days, but there are some promising signs that it could be a top in the dollar index, at least a short-term top for the time being. We'll keep monitoring this. Obviously, we have our gold play in the trading floor already. We'll be looking to add into the silver play as well. I've also been accumulating the silver stock highlighted in this webinar. If you've got any questions on this, please reach out in the trading floor or drop us an email to support. Cheers, guys, and we'll speak soon.